All right, boys. Today's a different type of video. These are the exact rules that I've learned in my 2 to 3 years of day trading that I want to share with y'all and that I think can make y'all more of a profitable trader. Now, first things first, rules are very, very important when it comes to trading. Trading in general is one of those things where you really have free will. For lack of a better word, I'm gonna just say free will. You have complete free will to do whatever you want in the markets. Now, prop firms keep some of those rules in check, like consistency rules, loss limits. But when you're on your own live account and when you're trading stocks, for example, you can buy and sell at any time. I mean, as long as the market's open, you can take as many trades a day as you want to. Uh, and you can lose as much as you want until you lose the account. So it's really, really important to have ground rules first to ensure that you're profitable, right? I mean, the entire goal of trading is you want to make enough money to whatever. You just want to make money out the markets, you want to extract money out the markets, and that's the goal of trading as a whole. But when you trade without rules, uh, you get really screwed in the process, and you end up doing things that you're not really supposed to do in live markets, and that causes you to be unprofitable and lose a lot of money in the markets, especially when you don't bound yourself by any regulations in a free market. It's just very, very complicated. Or not complicated, it's just very, very hard to trade without rules in general. And there's rules in all sorts of aspects. There's strategy rules, there's risk and management rules, and I just want to cover all of them that I use personally. Not that I think that you should use, that I use personally. And let's just hop straight into it. So today I just got trading rules that I use, and these are trading rules that I've written down for myself as well. So it's not like I'm just giving y'all like some bullshit ass rules. All right. The first trading rule that I use, I think we should talk about setups, is A plus setup only. Now I've gone over this on this channel, but the video didn't blow up, so I'm just gonna go over it again. For me, I want to see a high time frame sweep plus reaction. If this doesn't happen, 9 times out of 10, I don't take a trade. If there's not a 5 minute sweep or above, most of my trades have high time frame sweeps with a reaction. Or if there's not a high time frame sweep on Nasdaq, there's a high time frame sweep on ES with an SMT. So it's really the same thing. So high time frame sweep plus a reaction for sure. I need a break of structure on there and an inversion of some sort. Bonus if a fair value gap is filled. But for me, I need this type of setup to enter trade, right? That makes an A plus setup for me. And these are the type of trades, especially when you're unprofitable. If you haven't extracted money out the markets, do not be fucking around on these accounts. Because if you haven't made money from the markets, you're probably broke, right? You can't afford a bunch of accounts. You can't afford to be fucking around on these accounts. So really, if you haven't made money out the markets, really stick to this A plus setup only rule. When I was getting my first payout, when I was in the process of getting my first payout, those 2 weeks I took only A plus setups, right? I didn't have any edge in the market. I didn't have any discretion in the market. I didn't really know what I was doing, except for the fact that I know what my job is. I know what I get paid for. My job is to trade the best setups that I see possible. So that's what I set out to do whenever I was getting my first payout, and that's what I need y'all to do as well. Y'all need to take these A plus setups. That's the first rule. It should be a A plus setup. Now, let's say suppose that there's no inversion, right? I wouldn't take the trade. And then, okay, Will, we can go over this. All right. Second, risk management rules. You should be risking, you should set an amount. For me, one fourth, when I'm trying to pass an eval, one fourth of drawdown should be risked. All right. This makes for bigger trades, especially one fourth of drawdown should be risked. Now it can go a little bit more over by like $100, maybe. It can go a little bit less. Obviously, you're not going to get like your exact risk amount to the dollar amount, but sort of in that range, I need to be in there. If it's not there, then I'm not there. Another thing, my stop loss should be below slash above a high or a formed fair value gap. Because, all right, let's say that I'm taking longs. Uh, that like, how do I explain it? But if I set my stop loss below a low, right? That's the point where it would invalidate my trade bias on that trade. Or like below a gap, right? If market comes in versus this already formed for value gap, it shows that we weren't going to go long there. So that's like the perfect way to idealistically set a stop loss. You can't just set it somewhere random. So that's sort of with the setup part. If the stop loss doesn't look proper, then really I'm not taking it. Another thing, this doesn't really go with risk management, but 1 to 1 RR minimum. Now, obviously, maximum your target can be whatever you want, but minimum you want to have 1 to 1 risk to reward. If I put in $10, I want to get $10 out of my trade minimum. If I put in $100, I want to get $100 out of that trade. Anything less, I don't want to be risking $500 to make $300. That doesn't make sense. You want to get an equal or a trade in your favor or in your balance. Now, it gets more complicated down the line. Either you can risk more with a 1 to 1 or you can risk less to a 1 to 3 with a lower win rate. So it gets more complicated down the line. But if you're trying to get your first payout, this is the rule that you stick to. Now, I'm trying to think of what other rules. Oh, trades a day. This is a very, 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 very big one. Trades a day. Now, for me, I say one trade a day is perfect. Now, on Thursday, for example, I took two trades, but the second trade was a reaction off of the first trade. I caught a long to the London high. We swept up the London high. We got a reaction, and we inversed high time frame for value gaps. So I could already assume that we are making a reaction off of the trade that I just took. Which in my head, it sort of broke a rule. I'm sort of risking the profit that I made for the day, but that was an A plus 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 setup. Matter of fact, I think I caught 100 ticks, and the entire downfall was about 800 ticks. So I caught 1/8 of the move. So that was the right idea, even though that I broke one of my rules. But if you're trying to get that first payout, one trade a day, clear cut, done, bang, out. One trade a day is all that you need. And I really used to stick to this. And now when I have a little bit of discretion and edge, sometimes I break it and take 2 to 3 trades a day. But one trade a day is really all that you need, win or loss. Especially if it's a loss, get off the markets. You don't want to be risking even more to make back your money. You never want to be that Mr. Make It Back type of guy because usually it never happens. Like personally, me, every time I take a loss and I try to take re-enter, I usually get burnt on that loss. So I don't think it's worth it at all. Now let me check and see if there's any other rules that I have written down for myself that am I also connecting? Yeah. I want to see if there's any other rules that I have written down for myself that I haven't told y'all yet. Oh yeah, this high impact news days. Now, I don't know why it's over there, but no high impact news, no CPI, no FMC, none, etc. So you don't want to be trading on days like this because it's a lot of high volatility, right? Uh, there's a lot of high volatility in these days, a lot of fake outs, just a lot of unnecessary price action. And on top of the reason I love missing out on days like this is while everyone's up at like 7:30 a.m. 1 hour before market opens, I'm sleeping in, I'm rejuvenating, and usually these happen on like Fridays. So like I'm getting like an extra day off of work. Think about trading as your job, except that you're making more money than the average job, but trading is your job. And you want to take as many days off as possible. Because at the end of the day, if you're profitable, you're still going to make the money. Now you're risking, like, just taking bullshit ass trades when you could be sleeping, rejuvenating, working on something else, or just backtesting and getting right for the next week. Uh, I think that's really all the rules that I have to cover. I mean, there's risk management, setup rules, trades a day, high impact news days. If I sit here and think there's probably more, but like these are like really like the basic rules that you should be following on a day-to-day basis. Now, I'm not saying take this, put this on your own Google Docs. You could if you want to, but idealistically, you should make your own version. This is the version that I have for myself. This is what's been working for me in the past, but you can make your own version if you want. Again, I appreciate y'all. Y'all boys, have a great day.